I think the biggest sustained trend right now is that there is evidence that the job market is weakening. Could that change over? Absolutely. But you are seeing more slack. JP Morgan wrote a piece on this morning and saying, there's more slack out there and that we have to be at least aware of a weakening job market and what the impacts could be. Here's again what I was talking about from number one is if you heard number one and consumer sentiment being weak and all that stuff, you would think revenue growth in the S&P 500 would be struggling. It is not. If it holds, we're still not quite through earnings yet, but we're getting pretty close to the end. According to FactSet last week, we have, based upon this quarter's revenue growth, is 8.4%. That's the highest since 2022, if that holds. And there's really not a ton of companies left that could dramatically swing that. But it looks like we're having a pretty robust revenue growth quarter for the S&P 500. And again, what does that derive from? It derives from the fact that we're much more concentrated in AI-oriented companies in the S&P 500. When you invest in the S&P 500, 35% of your money is going towards AI-related companies. Less than 10% is going to those consumer companies at this point right now. So again, it is always a broad swath. 500 companies in there. But just that concentration level is really changing the course of what is actually driving that index's performance and that, the revenue growth from those kinds of things. Because AI-oriented companies, your Apples, Microsofts, your NVIDIAs, they're growing very fast. And so being more wedded towards those companies is creating that accelerated revenue growth.